In unit number 7, we go into homeowners policies. You already know so much about this chapter and we haven't even opened it yet. The only real difference between a dwelling policy and a homeowner's policy is a homeowner's policy is what's called a package policy. What that means is we have property and casualty combined in a single contract, a single policy. A homeowner's is a package policy, and from here on out, whenever I say package policy, you know that we have property and casualty combined in a single contract. The state may ask you this. Also, in a homeowner's policy, homeowners need more than what you get in a dwelling policy. Why? Because homeowners live at that structure 24/7. We do not have the basic form in a homeowner's. There is no HO1. The state may ask you that because a basic policy only covers for fire, lightning, and internal explosion, and homeowners need more coverages than that. The state may ask you about the HO2, the HO3, the HO4, the HO5, the HO6, and the HO8. You must know all of these for your state exam. And if it's an HO, it's a package policy. Coverages A, B, C, and D is the same, except in a homeowner's policy, we get more. And that makes sense. And of course, I pay more for these policies. The state is going to make sure you know the difference between a dwelling policy and an HO. Simple. Dwelling policies are monoline. They only cover for the property. And you have to endorse that policy to get liability. In a homeowner's, it's a package policy. It's property and casualty combined in a single contract. In our books, we pick up on page 164. Down here, highlight this whole paragraph under the homeowner's policy. It says, the homeowner's policy is a package policy or multi-line policy because it provides property and liability insurance in a single policy. Page 165, eligibility of the insureds. I believe the state will ask you questions here. First bullet, highlight, the named insured must be the owner-occupant. Second bullet, highlight all of this, put an asterisk here. The home cannot contain more than 4 families. I've seen that as a state exam question. Now, the next bullet says the named insured cannot purchase coverage for only personal property unless the named insured is a renter. The next one, highlight all of this, put an asterisk here. I believe the state's going to ask you about an incidental. It says, the dwelling must be used exclusively as a residence except for certain incidental occupancies, such as offices, professional or private schools or studios. So yes, I can use my home for incidentals. Once in a while, I may have a student here at my home to tutor them. I can do that under my homeowner's policy, but I only do it once in a while. Remember, it's incidental. Manufacturing is something I'm doing all the time, and that is not covered under this homeowner's policy. We'll talk more about that later. Now, on page 165, down at the bottom, highlight that whole paragraph at the bottom. We see this multiple times in your book. Highlight, put an asterisk here. If the named insured dies, the policy continues in force with the representative, an executor of the estate of the named insured until the policy can be replaced or expired. Every state exam I've taken has asked me that question twice. Make sure you know, just because the state hits you with a question or a similar question twice on your state exam, keep your answer the same. Don't change it. If you know that's the executor or the representative, keep your answer the same. On page 166, we go into the general conditions. You know exactly where we're at in the contract. You know exactly what the conditions mean. That is our duties and obligations required. Between the two graphs on page 166, I believe you have up to 4 state exam questions here. Let's read this. General conditions, duties and obligations required. In addition to the conditions that apply separately to sections 1 and 2 of the homeowner's policy, there are general conditions that apply to both sections. Under the cancellation conditions, the insurance company may cancel for any reason within 10 days. Underline 10 days, put an asterisk here, that is a state exam question. Written notice to the insured during the first 60 days. Underline during the first 60 days, put an asterisk here. That is another possible state exam question. Of a new policy. After the policy has been enforced for, they just said it twice, folks, underline, for 60 or more days, the company may only cancel for the following reasons. These 3 bullets are all possible state exam questions. Highlight these 3 bullets, put asterisks here. You must know this. Material misrepresentation by the insured, 30 days notice required. Underline 30 days notice. Substantial change in risk, 30 days notice required. And the last one, non-payment of premium, 10 days notice required. Those are all state exam questions I've seen. Underline those numbers, put asterisks here. At the bottom of page 166, underneath the second paragraph, or the second paragraph from the bottom, highlight. The insurance company retains the right of non-renewal, 30 days notice required. Underline non-renewal, underline 30 days notice required, put an asterisk here. Page 167, to the right of your graph, you see it again, non-renewal, and in that bullet, 30 days advance notice required. We go into the standard mortgage clause. We've read this before. Remember, if you have an additional insured, they have rights under the policy. And if you fail to file a claim and get something fixed, they have a right to know about it and they have a right to fix it. And if you fail to pay for the premium for the policy, your additional insured, your mortgage company has a right to know there's no policy on that property because they have insurable interest. They will either pay for that policy or they'll take out another policy and they'll pay for it because they're not going to allow that structure, that property, not to be insured if there's a loan. The state may ask you this. You saw it twice in your book. On page 168, all of these bullets are all possible state exam questions. Make yourself a note. You must know this. There's no way getting around it. I do not know where your state exam questions are, but you will have questions here. These bullets highlight, put asterisks. You must know them all. HO2 is a broad form. The HO3 is a special form. HO4 is known as a tenants or renters form. That's a broad form. HO5 is a comprehensive form. Now, this is the only time we see comprehensive in our books. Comprehensive is like buying a steak and lobster. It's the best that's offered. I'll talk more about this later. The HO6 is a condo form. That is a broad form. And the HO8 is a modified form for special risk. That is a basic form. I'll talk more about this later. But you must know all of these. I do not know where your state exam questions are going to be, but they will hit you with questions about the different HO policies. On page 169, we go into section 1 for property. On coverages A, B, C, and D, you'll recognize this, but the percentages are higher. Why? I'm in a homeowner's form. In your book, highlight coverage A is for the dwelling at 100%. Coverage B is for the other structures at 10%. Coverage C is for personal property. This increased to 50% from the dwelling form. And coverage D is loss of use. That increased to 30%. The state may ask you about those percentages, and your math questions may be based off of this. Let's keep reading. Let's go under coverage A in this paragraph. It says, coverage A dwelling covers the dwelling and structures attached to the dwelling, as well as the materials and supplies for repair and construction of those structures if they are located on or next to the resident premises. HO4 renters does not insure the dwelling. Underline that, highlight that, put an asterisk here. Why? That makes sense. The renter does not own the structure, so therefore there is no coverage A or B. They don't own the property, but they do have their property inside, so that starts out with them for coverage C on personal property. The state may ask you that, and it's also on a broad form. The next paragraph highlight all of this about the HO6 condo form. I believe the state may ask you this question. HO6 condo owners does not insure the dwelling, but does include limited coverage A for the inside walls and floors. And the standard coverage A minimum limit for the HO6 is $5,000, but it could be increased. The state may ask you this. On the bottom, we go back into coverage B and other structures, and it's not included in the HO4. Why? Because they don't own that property. On page 170, we go into coverages C on personal property.